Hello traders and welcome to another video review. Today is Wednesday, August 3rd, 2021. Let's find out what is going on the Forex calendar first. Employment change for the second quarter data had been published from the New Zealand, and as you can see, we are just in line with the previous reading, and the forecast was 0.4%, which means the market the data disappoint the market participants, and there might be some kind of a reaction on this on the New Zealand dollar. We will definitely find out what is going on and take a look at the New Zealand dollar today. Australian retail sales data published at 3:30. As you can see, we will definitely take a look at the Australian dollar as well. So what do we have during the London session? Composite PMI and services PMI from the UK are scheduled for release 10:30. So that will definitely be something to keep an eye on. We will take a look at the British pound later on. During the New York session, we got the, of course, ISM non-manufacturing PMI data scheduled for release, and the crude oil inventories at 4:30. So we will definitely take a look at the euro to the USD JPY pair, and then to the crude oil. So let's start our technical part with the New Zealand dollar. Daily time frame chart of the New Zealand dollar looks bearish, and as you can see, yesterday we got a very interesting situation. We broke above the short-term trend line. Let me just zoom in. Broke above the short-term trend line here. Let me just extend it to the right so you can see it clearly. All right, so we have a breakout. Yeah, there you go. We have a breakout. We bounced towards the level of 6,347, and this is roughly 5%, almost 5% of the bounce from the lows of 6,056 pips. We are still trading above the 30-day moving average because this is a daily time frame chart, but we have bearish engulfing pattern, clear bearish engulfing pattern. If we put our parallel channel here during this pullback, you can see that we've been trading inside of this this channel for quite some time, and then yesterday we have a bearish engulfing pattern, then a breakout lower, even despite the data that wasn't that bad. We're just disappointing, sorry, and market participants were disappointed. We bounced from the 30 days moving average. So that might be the situation here. However, this is a daily time frame chart, and that candle has not been closed yet. So please keep an eye on this candle, how this will actually end. We got the technical support. Let me change the color for the green at 6,190, and the other technical support, change the color to the green at 6,144. The last technical support is, of course, the low from the 14th of the July 2022, which is located at the level of 6,056. So breakout to the downside. Now this level will act as a technical resistance, the swing high at 6,347, and we are just trying to gain the momentum to the downside. As you can see, we barely moved above the level of a 50. We just touch it and then bounce, but little bounce that was, and bears are trying to push the prices lower. If they do, technical supports are waiting. We will see how this will, of course, be played out by the market participants. So let's just find out what's going on the Australian dollar. Australian dollar to the American dollar, daily time frame chart. Very interesting situation here, similar to the situation of New Zealand dollar. bearish engulfing pattern after a high at 7050 was made. So right now this is just another level that we can treat as a technical resistance. Very big bearish engulfing, and now the same situation. We are bouncing from the 30-day moving average, almost didn't hit this one yet. We are bouncing from the short-term trend line. The technical supports are waiting for the test. 6,831 on the Australian dollar to the American dollar, and 6,854. Those are the technical supports. There's one more, of course, around the level of 6,767. However, this one will be moved a little bit lower towards the 6,715. The last level worth of mention is the low from the, again, 14th of the July 2022, which is located at the level of 6,684. Since then, very nice bounce. Let's find out how many percent this price range is. This price range is 5.45% if we measure it like that. So very nice bounce, 5.45%, bearish engulfing. If we break below 6,831, the outlook remains bearish because the long-term trend is bearish as well. We should take a look at the British pound to the American dollar as well, because of the data. From the PMI, of course, the situation, PMI composite, PMI services. What do we have here is very interesting. Bearish engulfing pattern on the daily time frame chart, just ahead of the technical resistance after 4.5% bounce. We are trading inside the channel, so any break out of the channel below 1.2088 is bearish again. The last line of the resort, last line of the help, last line in the sand for the bulls is 30-day moving average 1.2060, and eventually mid-term trend line 1.2028, 1.2030, somewhere around this level. If we break below this zone here, made of the short-term technical support, 30-day moving average, mid-term trend line, then of course the outlook returns to bearish, and we will most likely break below the level of 50. On the other case, if we now make a very big green candle, this is very bullish signal, because bearish engulfing will get invalidated. So if we do this after the data, or for whatever reason will be today, then this move 4.5% will be continued, and this might be the beginning of some sort of the overbalance. Let me just find out what was the last nice bounce. 4.22, if I'm correct. There you go, 4.22. So this one is already bigger than that correction, and that correction, if we break above 1.2292, the upward move will be continued higher toward 1.2388, and this will be definitely the biggest correction to the upside during this at least 3-month period. Okay, so the outlook will then be bullish. So please keep an eye on how the market participants will play out this market right now. US dollar to the Japanese yen. Let's find out what is going on there. Very interesting situation. We broke below 131.36 on a daily time frame chart. We made a low at 130.42. However, this is a very strong bullish engulfing pattern. So the market participants are not that keen to go lower. The decline is now 6.5%, minus 6.5%. And we hit, of course, the extremely oversold, almost, there's a 29 points, there's 30 points. Okay, so we hit the extremely oversold market conditions level, and now the bounce is purely technical. However, it looks strong. Where is the next eventual target here for the bulls? I think they might test 135.55 before any sort of the down move will be made. So the situation Looks like we've made the wave A of the correction, so this might be the wave A. We are waiting for the wave B and for the wave C, so that might be the current wave progression, corrective wave progression on the US dollar to Japanese yen. And last but not least, crude oil. What's going on oil? We are right now on a daily time frame chart of the crude oil. We broke from the supposed triangle pattern, distribution pattern. We are inside of the descending channel, daily time frame chart. So this is a daily moving average, 30-day moving average. We are below 30-day moving average right now. It's 100.93 pin bar here. Abandoned chart here, bearish engulfing here, bearish engulfing here, big red candles everywhere almost. The last strong candle I can see on a daily time frame chart is this pin bar here. So this is the pin bar that tells you we want to rally. Well, we failed after the test of the lower triangle line, and then we made another pin bar into the 30-day moving average. Confirmation. This is just barely hanging on, guys, so please be very careful. Negative sentiment, negative momentum, 39 points, strong negative momentum. Bears are in control of this market. We should see a new low below 90.56, and then the target, the next target might be very interesting, because the next target would be around the level of 84.92, basically $85 per barrel. So please keep an eye on the current situation. The bulls are helpless, the bulls are struggling. Plenty of bull trap on the daily time frame chart of the crude oil. It looks like we will have a new low, new local low, and new swing low on the crude oil daily time frame chart soon. This is what the technical analysis is telling me. I hope I will see you tomorrow for the next part of the technical analysis of the various instruments. For today, that's everything from me. Thank you very much for watching this analysis, and I hope we will see each other tomorrow. Take care and bye bye.